everyone, I'm Fitria Sucianti. I want to make a short presentation on balance sheet, taxation, direct costs, and indirect costs. Balance sheet is the financial statement of a company which includes assets, liabilities, equity capital, total debt at a point in time. Balance sheet includes assets on one side and liabilities on the other. The asset section of the balance sheet breaks down what your business owns or value that can be converted into cash. Your balance sheet will list your asset in order of liquidity. That is, it reports assets in order how easily they can be converted to cash. There are two main categories of assets included on your balance sheet. Current assets. First, account receivable, cash and cash equivalents. 3. Inventories. 4. Cash at bank, petty cash, cash on hand. 5. Prepared expense for future service that will be used within a year. 6. Revenue earned in arrears for service done but not yet received for the year. Non-current asset or fixed asset. First, property, plant, and equipment. Second, investment property such as real estate held for investment purposes. 3. Intangible assets such as patents, copyrights, and goodwill. 4. Financial assets or excluding investment accounts for using the equity method, accounts receivable, and cash equivalents, such as notes receivable. Investment accounts for using the equity method. The net asset shown by the balance sheet equals the third part of the balance sheet, which is known as the shareholders' equity. It comprises issued capital and reserve attributable to equity holder of the parent company or controlling interest. 2. Non-controlling interest in equity. Liabilities are the money that a company owes to outside parties, from bills it has to pay to suppliers to interest on bonds it has issued to creditors to rent, utilities, and salaries. A compensable provision for warranties of course dedication or contingent liability that are both probable and measurable. Financial liabilities or excluding provisions and accounts payable, such as promissory notes and corporate bonds, liabilities, and assets for current tax, deferred tax liabilities, and deferred tax assets, unearned revenue for service paid for by customers but not yet provided, interest on loans stock. The purpose of the balance sheet is to give users an idea of the company's financial position, along with displaying what the company owns and owes. It is important that all investors know how to use, analyze, and read one. The accounting equation is a representation of how these three important components are associated with each other. The accounting equation is also called the basic accounting equation or the balance sheet equation. A difference between cash and accrual accounting lies in the timing of when sellers and purchase are recorded in your accounts, cash accounting recognizes revenue and expense only when money changes hands, but accurate accounting recognizes revenue when it's earned and expense when they're billed or but not paid. A tax is a compulsory financial charge or some other staple of levy imposed on a taxpayer or an individual or legal entity by a governmental organization in order to fund government spending and various public expenditures. Most countries charge a tax and on an individual's income as well as on corporate income. Countries or subunits often also impose wealth tax, inheritance tax, estate tax, gift tax, property tax, sales tax, payroll tax, or tariffs. Lastly, identifying hours for future reforms requires country-specific diagnostic assessment. Broad hours for developing countries identified internationally include, for example, property taxation for local revenue, striking expenditure management, and effective taxation of extractive industry and multinational. There are two types of indirect costs. One are the fixed indirect costs, which contains activity or costs that are fixed for a particular project or company, like transportation of labor to the working site, building temporary roads, and then the others are recurring indirect costs, which contains activities that repairs that repeat for particular company like maintenance of records of or payments of salaries. Costs are assigned to products usually in a large batch, which might include an entire month production. Eventually, costs have to be allocated to individual units of products. It assigns average costs to each unit and is the opposite extreme of job costing, which attempts to measure individual costs of production of each unit. And last but not least, so thank you for your attention.